Once again, we are back with them Hollywood trades, and we are on gold. ZAL USD. It is the apple of my eye. Anyone who knows me knows that I am forever in holy matrimony with this chart. It is the bull of all bulls. Indices give it a run for its money, but nothing is like gold. Everyone knows it. That's why you see this chart. This chat is just mind-boggling with how many people are commenting in this chat. It's mind-numbing. But we are on the daily. We have changed a couple markups, and as you know, as we change these markups, I will continue to trail you along. We have a change of markup here. It did sweep the levels, but if you look at this, this is now just a pure barrier of liquidity that exists in this area here. So with that being said, we are closing bearish. So as you know, when we get those bearish closes, we want to know what it's going to do at this level, because if it immediately recovers this bearish key level, that means that not a lot of people got out right there, which may mean that this was just a stop hunt here. And with that hunt over with right there, we do have a bullish key area here, because after we closed over this range, the bulls claimed this range. So basically this will be one of the main supporting imbalance ranges. And so as long as we don't get any closes under this range, we will remain bullish for the most part, and we will see any of this as sweeping or stop hunting at any of these lows right here. It's not that many. There's only so far one, then there's two, and then obviously this one right here is just crazy. But it looks like we do have a successful stop hunt here at the what would previously be labeled as the CRT low. I'll actually label that for anybody. I usually don't label these broomstick sweeps, but for anyone following along, it would be easier to understand that as a CRT low. And again, in the bar retest, we would just be waiting for this to close over this. And I would say that this would indicate a sense of bullishness with this Fibonacci-esque. What is this? This Fibonacci-esque retrace. That all of these levels line up directly with the 50 and 50. I don't know what level did I make that one. That's the 50. The 50, yeah, 50. It's actually funny, 52 and 48. So that 52% level, right beyond the 50%, is where we are. So this that particular low to that particular high, we are measuring that and coming up with a pretty neat fib 50% discount. So any of that is, it looks like everything below this is being used as a discount range. We are at 4 minutes coming up. This is a very neat analysis. There's not too much more to add here on this time frame besides maybe some volume profile notes. Right here we do have, where's our volume point of control? Wow, it's saying in this range our point of control is way down here. I haven't brought it. Where do I have it at? I have it set. I actually have it set pretty deep. I have it set way over here, which even still, with that being said, that is a previous breakpoint. What I'm going to do is I'm going to reset it here, right, to not incorporate this volume anymore, because that's kind of, we know what that is here. That's the previous all-time high before it made its blast up above that for a deviation run. And we see this last pullback before it broke through the high was our deviation, our highest deviation. As we saw it start to break down, we could put some deviations up, but right now we're not too focused on deviations. There may be a deviation of this and then project that up. That'll be our primary deviation. Let's see. You know what? I'll do it because we're only at 5 minutes. Let's go ahead and copy this right here. And let's go ahead. It wouldn't be from, you could do one from this level to this level, but this is like a clean, there were no turtle soups or no popping of any of these highs on the way down. So there was no swing high. So we'll use this full pullback as a deviation to see where the 1.78 is. And the 1.78 exists right above the 3 mark. And that is all of the hedge funds and all of the banks have been eyeballing this level, that 3,000 level. There's a few pips, 400 pips, 500 pips past that level. But basically somewhere up in there is where we would be seeing where we should be seeing our first slowdown if we do pop these highs, and then we'll get a more accurate measurement, whether it be this one. We don't know if it's this one yet, but we'll get a more accurate measurement when we get a closing above some of these highs here, and then we can measure that for a more accurate deviation target, because there should be another slowdown before that. But that's pretty much what we're looking at. That looks too messy for me right now. Too many markups in here. And the volume as well. Volume is bearish and it is peaking above, but it's not as much volume exchanged in these candles as in this candle here, or in these candles for that matter. So there's a very consolidation-esque zone from here to here. This is how you can know consolidation. How do you know we're in a consolidation? Or how can you predict the consolidation? Look at the range. Just look at the range, and okay, we could one blast straight through this range, but we didn't. We got to the highest liquidity point before the top of the range and we stalled. So with that being said, Fibonacci retrace. I'm going to take that off. That looks messy. I think this even looks messy for me because it's drawn too far past this is called repurposing key levels. We're going to repurpose that QML level into a bullish order block level. Again, you guys know I don't like all this. This is all distracting to me for my eyes. I barely like the volume profile being there, but it is so valuable. Because right here, we'll see, right? We like to see slowdowns. There will usually be an absorption and a slowdown in a low volume space like this. So, that's pretty much it for this analysis. We're at 8 minutes, and there isn't much to add except just reiteration of watching the close above these levels. You see, I do most of my analysis on the daily and on the weekly. Once you get down to the hourly, it's like it's child's play because you're looking for those closes. Like we're back bullish on the hourly. We got the sweep here. This is what you guys like to see, right? These smaller time frames. So it's all the same. It's all the same once you get like right here, right? So that's your main QML level. That level is solid. And then you'll have this level here, which is also doubling. Not bullish. That is a bullish displacement, but we're going to use bullish key level. Bullish key level. I'm having a stroke. I am full in, locked in on my spaz. Okay. And what we had here was a turtle soup. I'll mark that as well for anyone following along. I just mark this stuff out. That's, sometimes I'll take some of it off because it's just a lot. You don't need it all. But for educational purposes, I'll do bullish souping. And that's just when you start in a direction and then you stop hunt the candles levels If you're bullish, you're stop hunting the lows of candles. That's a soup. That's a very good sign that if you dip that, anything after this should be bullish. Up into for this one, it was really this was our first stopping point. That is just a DOL target. And we will have obviously another buy side target there. There is a wick before that, which is this one. But I wouldn't be too concerned about this one. Let me move this. Where are we at? Are we at midnight? We are at midnight. We are at 1. Matter of fact. And so there's midnight. This is going to be a key bar level, a break and retest level. As always, however, we do have this is going to be our main point of interest in here because we know just as turtle soups, where it grabs the liquidity out of those candles and then goes in the trending direction. Same with these zones. These zones are for rebuying and re-entry on longs. I would mark this level as well. These are bar levels as well. Candy candle level is a break and retest level. And so we also got back above whatever that is. I'm really not too concerned about that right now. I will call this, I don't know. Let's just say that's balanced. And when we get back above those newly balanced price ranges, you can really get some good volatility back in that direction above it. We close above it. So anything above this, also you see how it's repurposing these levels, right? You see it. It's algo magic, as I call it. But yeah, that's about it. It's all pretty clean. This is how we dog walk the market. Go ahead and share this with a friend. And I think I'm going to go ahead and bid your arrivederci and get me some rest. I will see y'all later.